Finally, the markets bounced back. The PSEi broke its 4-week losing streak. Is the worst over? Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. So to tariff or not to tariff, Trump's self-imposed tariff, which was supposed to take effect on Saturday, caused the S&P 500 to open last week on the low end but reverse during the course of the trading day after Trump delayed tariff imposition for a month after Canada and Mexico agreed to ramp up security at their borders. Now, tariffs have the effect of driving consumer prices, which could be inflationary for the US if ever that pushes through. Then last Friday, plans for reciprocal tariffs were announced, much to the market's disappointment. These tariffs seek to equal the tariffs other countries impose on US imports. With Trump saying, I think that's the only way to do it. They charge us, we charge them. Then Trump suspends tariffs on small packages from China. Trump made the change last weekend as part of a wider decision raising border taxes on goods from China by 10% on February 4. Remember that China is the manufacturing capital of the world, and the largest category of Chinese imports to the US are electronics, including the iPhone. So a $999 iPhone, if you put a 10% tariff on that, would cost $1,099. What is this called, right? Inflation. Of course, it is not this easy. The US CPI basket is primarily composed of shelter, food, and then energy, right? Most of which the US can manufacture inside of their country. But, you know, for example, shelter, they're importing a lot of appliances. That can affect rental prices. Apparel is one of the top 6 components of the US CPI baskets. If a lot of these brands have their factories in China, then that could also raise prices for these goods, right? So companies also like Shein and Temu will also have a big hit. Now, looking at the different countries whose GDP is dependent on exports to the US, we see here Vietnam, Thailand, and Malaysia will be the hardest hit among Southeast Asian countries if the trade war expands. The Philippines at number 17 could survive with the least impact among these countries. Now, meanwhile, inflation settled at 2.9%, which is a welcome figure given the peak season last December. While housing, electricity, and gas went down, it was food, beverages, and tobacco that drove inflation last month, particularly as vegetables, or in this case, a fruit, were affected by typhoons like tomato, were more expensive by 12%. Demand could also keep inflation elevated as we saw the unemployment rate improve to 3.1% in December from the 3.2% last November. This puts the full year jobless number to 3.8%, the lowest, or should we say the best figure since 2005. The US labor market also showed continued signs of resilience in January as the unemployment rate unexpectedly fell to 4% from 4.1% the month prior. The unemployment rate now sits at its lowest level since May of 2024. Let's look at some charts for this week, starting with the Philippine 10-year yields. Now, the 10-year yields retraced back to 6.032 before bouncing back to 6.087. Now, whether this is a fake down remains to be seen. Let's watch out how the 10-year yield plays out closer to the BSP announcement this week. Now, looking at the US 10-year yields, inflationary concerns bumped the US yields up to 4.493%. It bounced off the support level here at the 61.8 fib, the 100-day EMA, and the trend line support here at this point. Look at this. It looks like it is getting ready for a wave 5 of an Elliott impulse wave heading towards 5%. So while the 10-year yields have gone up, the DXY also bouncing off of the 50 EMA It is still in an uptrend. Let's see how it will affect the USD PHP currency pair. The peso appreciated back to almost the 57.74 level, but has depreciated in the last 2 days back to 58.11 with the DXY, and the US 10-year yields bouncing off their support levels. The peso could see some pressure in the next few days. Now let's look at the PSEi charts. The index bouncing back from last week, breaking a 4-week losing streak, with the index improving 2.7% to end a little above the 6150 support level. Now the markets could retrace back into the 38 or the 0.5 fib, no, 6121 or 6072 zone. Let's see if these levels hold for a possible higher low price action, which would be bullish for the markets. Watch out for this strong resistance area along the 6350 zone as we enter into another rebalancing week, this time for the FTSE, where our favorite utility stocks, Aboitiz Power and Manila Water, are rumored to be for inclusion. Both stocks broke out of a long consolidation. Look at Manila Water, almost a year-long consolidation, AP, a consolidation along this area, but it already broke out of this cup and handle formation actually. Now for Manila Water, I suggest taking profits as it is close to the target range. One can buy back along 28 or 28.70 when it pulls back. Now for this week, I am looking at 5 stocks that have flashed buy signals for me, right? First up, we have Ali. Look at the price action for Ali. This is on a downtrend, down, up, up, down, and then here, a strong upward move breaking through the 20 EMA, breaking through these resistance levels here, a bullish move, a retrace here. Let's see if Ali manages to hold support along 25, and a bounce back could mean a buy for Ali this week. SMPH, same scenario here. We have these lower highs broken with one strong green candle breaking through the 20 and the 50-day EMA, a retrace back into support of the 50 EMA. This would be a good buy zone for SMPH this week. Also, BPI reporting strong earnings, breaking out of all of the dynamic resistances. It is now at 130. Watch for a retrace back to 128 for a buy. Now, BPI's loan growth last year was 18%. Very impressive. Net interest margins up 22% year on year. BPI is currently the best bank for me. It is a wonder how it even went down here. We're already mentioning a buy along this area, 116, 118. Congratulations if you were able to buy the dip on this double bottom. Next, we have Metrobank. Metrobank also breaking through 20 EMA, 50 EMA, and has hit the 100 EMA resistance. We also have the 200-day EMA along 71.30, which it also broke. A retrace along the resistance, which is now support, is a good buy zone for Metrobank. And lastly, we have Monde, right? Monde had a big upward move here, but it hit the 20 EMA, which resulted into this sell-off. But the current rally for Monde broke through the 20 EMA. It has hit the 50 EMA, a retrace here, a bounce back could be a bullish sign for Monde. Watch out for price action. This could be a good time to enter Monde. The worst might be over, right? Let's go to the S&P 500. What happened to US stocks last Friday? It fell as investors reacted to the threat of more possible tariffs from the Trump administration while digesting a jump in consumer expectations overshadowed by the monthly jobs report. Now, the stock market slid on the latest concerns, giving back several days of gains and closing the week marginally down. Now, despite the continuous news earnings and economic data, neither the bulls or the bears were making any directional progress in the equity markets. So at this point, investors are patiently waiting for the next big catalyst to help the markets make up its mind. Now, looking at the seasonal charts coming into the second half of February, looking at the historical trends, we do experience a usual pullback, especially during post-election cycles before a possible run-up during the later part of May. But we also have to consider the stats here when the incumbent party loses, represented by the red line here. We might be in for a choppy year ahead. Now, looking at the average performance per day table, look at the later half of February. It's a sea of red. So, we will see what happens. But at this point, as I discussed, Trump's tariffs is a bit concerning, as the possibility of inflation going up, I think, is very high at this point. So I'm a bit cautious in the US markets right now. Now, the probabilities of a rate cut projects a 50% chance by May, which really does not make sense. We would have to wait and see how the CPI numbers would look like closer to these dates. Now, this week, core inflation will be announced on Wednesday, so we will not see any tariff effects yet, but the March and April numbers could worsen. I'm surprised not a lot of analysts are pricing this in, and the markets continue to be bullish. Interest rate decision for the BSP will be on Thursday, with the BSP expected to cut rates by 25 basis points. So for this week, let's hope for a continuation of the market bounce. Watch out for a possible higher low. Best case scenario, we dip into 6-1 to give a chance for buyers to come in, get some momentum towards this critical area where the markets could consolidate. Right? So that's it for this week. It is a short one. Please like this video. If you found the information useful, please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.